last class we looked at the petty cash book, and you know what the petty cash book is for and all of that. So this was the activity that we got, using the information to prepare the petty cash book, and these are the transactions. So January 1st you have cash for $100. That's the start of the month. And then as you progress through the rest of the month, you have January 6th, postage, $1.50. The 7th, you have the notebook, $5, and so forth, so forth. Go straight to January 30, KEMAR refund, $20. So this is a petty cash book template. It's always set up like this. You have your debit side, which is from here, receipt to total, and you have the credit side, which is the entire analysis column. The analysis column now is where you pay out money. The debit side is where you receive the money. So in the analysis, the credit side, you can see the postage, the stationery, travel expenses, office expenses, sundries, expense. The folio column, the ledger account. We say that the ledger account we use it for the personal accounts, that's where you record them. Alright. For the folio columns now, it tells the source document where these transactions can also be found, because remember that these transactions are recorded in two places, two different separate accounts, where the money is coming from and where the money is going to. So based on the activity here, right, we started off with January 1st cash for $100. Now you would go to the top here, right, in the date column you put the January 1st. Right, then now in the details, and remember that the petty cash book only records transactions which are of small value. So you start off now in the details for January 1st, you won't be writing cash. The cash up here would have been a balance, because this $100 is the money given by the petty cashier. This is the money given for you to spend. So all these other expenses that are underneath are to be paid out from the $100 that was given at the start of the month. Because January 1st, we always see that as a balance BD. Balance BD is always the first of the month. So you can write out the word balance and just put BAL, BAL, BD. Now for your folio column, this money will be taken out from the cash book, because this is large expenses. It's large amount of money. So you can just say cash book number 1. Then the total now will go to the receipt side. We're not going to put it in the total column here. These are for the expenses. We're going to put it on the receipt, because you would have received the $100 to spend. You receive it. So you put the $100 right here. You have to try to put everything in line. Right? So we're finished with January 1. That's check off. So January 6 now, it says that for postage, $1.50. So you go back here. So you write January 6 details column. You're gonna write postage. Right? And then when the transactions are recorded in the petty cash, it is also recorded on the petty cash voucher. So the shorten that you put PCV, and since that this is the first transaction, you put the number 1 beside it. The total for the postage was $1.50. So in the total column you put $1.50. Then because it's postage, you go to the analysis column, you find postage, you put $1.50. You just continue the same process, right? So you finish with that. January 7, we have notebook for $5. So you do the same thing. January 7, notebook. This is petty cash voucher number 2. We'll say that notebook cost $5. Then now you go to the analysis column and see which column is appropriate to record the notebook, right? Now you look, you have the ledger, the folio, the sundry, the office, travel, stationery, and postage. A notebook would have fallen under stationery. So under stationery here, in the same line with this, you put your $5. So when you go across, it's supposed to can be in line. So we finish with that. January 10, postage for $2. So same thing. January 10, postage, petty cash voucher number 3. Remember, this is the total column. So in the total column, you put the $2. Now under postage, you put $2. Finish with that. January 11 now, taxi fare amounting to $5. So same thing. January 11 in the date, right? In the taxi fare, petty cash voucher number 4. I always say that taxi fare was $5. You're gonna look in the appropriate analysis column. And then taxi fare could go to postage. Could go to stationery. So quite likely that would have to go to travel expenses. You just kinda go across. Because I can't see the entire screen, I just put the dots here so I can see it. So the $5 right there. Then envelope $1, January 12. Petty cash voucher number 5. Total is $1. And then the envelope, we're putting it under stationery. We just continue doing the same thing. January 20, office cleaning. So to clean the office, it cost them $15. So January 20. So office cleaning, petty cash voucher 6. That amounted to $15. And then now, because this is expense to clean the office, it would go under office expense, right? Office expense. So you go right over there and you put the $15 there. In the 21st of January, tea for the office, amounting to $3.50. So January 21st, right? Let's say tea. Petty cash voucher number 7. That was for $3.50. And that is going straight up because it's for the office. we're going to put that under office expense. So see there, office expense right there. So the 22nd of January stapler costing $30. So January 22nd stapler petty cash voucher number 8, right, for $30. And the analysis column for this, you'll put it under stationery. Stationery is the second column here. I try to put everything in line, $30. You just tick off as you go so you don't miss out anything. Then we have the sundry items. These mean little items amounting to $12. So the 23rd, alright, so January 23rd, sundry. You have to put the word item there if you want to find, but because of space, petty cash voucher number 9 amounting to $12, and the analysis column, this will go straight over to the sundry. The sundry is right here, the $12. Now after the sundry now for $12, last but not least, you have the 30th of January, 30th, you have Omar with the refund of $20. So what you do, same thing, I'm going to put January 30th, I write Omar's name there as a personal account because it's the name of a person, and you put refund. So quite likely we're paying out some money here, right? Now this money now would go to the cash book. So in the same cash book number 1 where we got the balance from before with $100. So now you continue the same way, you put it in the total $20 and the proper analysis column. That is going straight to the ledger, right? Because it's not postage, not stationery, not travel, not office, not sundry. So straight over to the ledger account. Ledger account. As I said, don't put the dots up because I can't see the entire screen. I just want to level it a bit, you know. So the $20 will go about right here. So now we have completed all the transactions, but we're not done as yet with the petty cash book. So this is what it looks like in full view so far. This is what you're to have. Now, after you do all of that now, you need to draw a single straight line from the total column to the end of the analysis column. You draw the straight line. Now after that, now you need to find the totals. Now when you find the total in the total column here, when I add up everything here, I would get, when I add everything here, I got $95. That simply means that I spent out of the $100, $95 in the cash, from the petty cash, in the petty cash book. $95. Then now I'm going to add the totals in each of these analysis columns. So simply mean that for postage, when I add $1.50 plus $2, I got $3.50, When I added in the stationery $5 plus $1 plus $30, I got $36, right? In the travel expenses, I only have the $5 there, so I just write back my $5 here. Basically, I just write in the totals for each, right? Office expenses amount to $18, $18.50, right? Sundry amount to $12. Something is going to this folio, but we didn't get that in class, right? You just leave that blank and then the $20 here from the ledger account. Now, when you add up all the total analysis, so the $3.50, the $36, the $5, the $18.50, the $12, and the $20 here, it's supposed to amount to the 95. So when you add a total column and then you add the total analysis column, it's supposed to end up back with the same $95. So you must get back the $95. Now after that, now you draw your double lines under the analysis column because you finish with those figures. So after that, now we have to do the balancing, because over here now the total here is $95 and you need to balance back with the $100 here. So if at the start of the month, right, the start of the month you are given 100, okay, I don't know why that's sliding like that, but you got $100 but you actually spent $95. So the balance for the month, as usual, when you subtract the total credit side and the debit side. Okay, so as I was saying earlier, the $95 here is showing how much you spent, and the $100 here is telling you how much you received. So you want both sides now to be balanced again. So you subtract the 95 here, which is the credit, from the $100 here, which is the debit. Right, just like the ordinary balancing. When I subtract the 95 from the 100, would leave it $5. And we need $5 more to make this side 100. So you put the $5 right here. Then that $5 will be called your balance CD. This is the balance at the end of the month. Balance CD. And this would have been the 31st of January. Alright? So you put a single line underneath here and you write $100. Both sides balance in the same line now there. Put the same single line and you put the $100. Then you put a double line, because you finish for the month now, you know. We get both sides to be balanced. So you put a double line to say yes, both sides of the petty cash book is already balanced. Now remember, once you have a balance CD, you must have a balance BD. Right? So after you do all of that now, your balance BD is the start of the new month. So after January, you have February. And it's February 1st. So you put February 1st right here. Balance brought down, because this figure is going to the next month. So remember that they had established right here that the balance CD is equal to the $5, which is right over here. Balance BD is equal to the $5. So on your debit side, you have to put on the opposite side. So this side was the credit side, this side is the debit side. So now you have to put the $5 there, because $5 is the balance that you had left. So remember, they gave you the cash. Look up here, the cash, which was the balance BD of $100. Alright, $100. After you did your analysis total to $95. So you had $5 left. So now, when you go to the second month and you have to pay for expenses, you already have $5 left in the account. And since that you need $100 each month, the petty cashier gives you $100 to pay the expenses. And you only had $5 left, you will now need $95 to be reimbursed from the petty cashier. So you had $5 before, and the petty cashier reimburse you now, reimburse you with $95, which would equal to the 100. You put $95 there, and February 1st is the same start of the month, and then now let's continue the lines there. Right there, so now you would put cash impress. So this was the amount of money you are receiving for the next month. This is what they call when you're reimbursed. So now you're finished. Basically, this is it. This is what the petty cash book looks like. So this was a question we got in class. That's the instruction up there that we ticked off, and then this long table itself now is basically the petty cash book. Remember at the top, always put petty cash book at the top and you put it in the center, but I had mine close to the instruction, so that is why. So basically this is it.